Hello everyone, I hope you guys are having a wonderful day. I'm Arif, your financial freedom journey partner. In today's video, I'm going to talk about the most important topic that is the US tariffs and how it is affecting my $160,000 of stock portfolio. So the last month, it's hitting really bad to like my stock portfolio is down maybe like $10,000 to $15,000 just in few weeks. So into this video, I will cover some strategies that I'm planning to follow to deal with this current US tariff situation, and I'm gonna shortlist few stocks that I feel like yes, these stocks are good to purchase during this tough situation. So if you're also facing the same problem, like the uncertainty, the problem, the market downtrend because of the US tariffs, this video is definitely for you. In today's video, I'm gonna cover it all, and after watching to this video, you'll have a complete idea like how to deal with this situation. I have logged into my stock portfolio account. So here I am using Wealthsimple. I'm in Canada. So in Canada, Wealthsimple is pretty popular and easy to use. So that's why if you're starting your investment journey, I would highly suggest you to start with Wealthsimple. So at the very top, you can see my current investment, my stock portfolio value, which is $162,644. So all time it's up by 55.70%, which is like $58,180. So let me show you some impact that was caused because of this US tariffs. So if I see the 1 month of performance, here you can see my portfolio is down by 6%. If we translate it in terms of monetary value, that is 10,412, like almost $10,500. So today it recovered a little bit. Yesterday it was like 160,000, so you can add two more thousands in here. So I was down almost like $12,500 in just like in a single month because of the US tariff. And here I do have some subsection of my accounts. So I do have TFSA. TFSA stands for tax free savings account. I do have my personal or non-registered account and the crypto account, and all the account types and all kind of stocks were affected by the US tariffs. Not only the US stocks but also the Canadian stocks that I'm holding, all were down, and it's a scary situation. Like we invest our money, hard money, to get some good returns, but if we face some situation like this, it's really terrifying. So that's why I feel like I really need to make a video and share my ideas, my strategies that I'm trying to follow to minimize my losses. Now at this point of to this video, I'm going to talk about few shares that I would avoid to purchase right now because of this US tariff situation. And the first share I would avoid for now is Apple. I am currently holding like 28 shares of Apple, which is like 6,700 USD in value, and it's up by 57.79%. Despite of this good return, currently I am not feeling that much of confident to purchase Apple share. There's a reason behind this. Apple is highly relying on China for iPhone production. So if they struggle to get iPhone from China, the manufacturing from China, so then their share gonna struggle. So that's the reason I'm just gonna avoid to purchase more Apple share for now. That's my personal opinion. The second share that I would avoid for now is basically not one, it should be two. So the first one is nvidia, and the second one is AMD. AMD, Nvidia, both are pretty much the same sort of company. So they work on the chip manufacturing sector. So here I do have 54 shares of Nvidia, and so far if you see the return that it's generated for me, it's like 418% return of all time. So when the Nvidia shares were down like like $130. I purchased 5 nvidia shares, and then the boom happened, the AI boom happened. So $50 a share went all the way up more than like $1,000, and then they did that 1/10 split. So that reason I got like 50 shares from the 5 shares. So that was a very good investment from my the point of view. And right now I am up by like 418%, but still I feel like I won't invest more on nvidia for now, because nvidia is highly dependent on Chinese semiconductor supply. So if there's a new situation, and right now the tension between US and China economy is very high, so that's why I am not that much of confidence. So that's why I would avoid to invest on nvidia anymore, unless there is some good news, there is some solution of this US tariff situation. So I will wait till things calm down a little bit. All right, so that's the second and third pick, and the last pick I'm talking about, it may surprise you a little bit, that is Tesla. The ticker symbol is TSLA. I have right now like 10 shares of Tesla, and it generated good amount of return for me. It's like 80% return of my initial investment. The problem with Tesla share is that Tesla may face a high cost due to tariff, because the auto parts. So in order to create this car, they need to have the parts ready, and China is the main supplier of the auto parts. So if there's high US tariffs, then Tesla would struggle to get all of the auto parts, and the company may struggle. So to that reason, I am not that much of confident to purchase Tesla share for now. Even if you see in here, like if you see the 1 month of performance, in 1 month it is down by 25%. This means already we can see the impact of US tariffs for the Tesla shares. All right, so now I'm going to talk a little bit about what specific things I would look for before investing in a particular company in this situation. The first thing is that I feel like if you really want to buy some US stock in this situation, the first thing you need to check is that if it is US based operation, it doesn't have any sort of requirement for instance, any manufacturer requirement, the auto parts or any sort of things that are coming from outside of US. So if it's a US based operation, then we won't have to worry about the US tariffs anymore. The second thing is that if it's a software driven business model. So software driven business model, there is nothing, there is most of the time there's no manufacturing going on. So that's why it's more of a like software based business. So it's way safer comparing to the other business model. The third thing is also very crucial right now. We need to be very sure that the company that we are planning to invest, it should have a strong balance sheet and growth potentiality. If it matches that, then if you have these three things going on for a particular company, I feel like yes, this could be a good investment in this situation. All right, so now I'm going to talk about a few particular companies that I feel like is okay to invest right now. It's my personal opinion. The first company that I feel like it's okay to invest in this current situation is Microsoft. The ticker symbol is MSFT. Currently, I do have like 5 shares of Microsoft I'm holding, and it has generated a 40% return so far. There are a few reasons why I feel like it's okay to purchase Microsoft shares right now. The first reason is it has very minimum supply chain risk. So Microsoft business, if we see the Microsoft business model, is more of a like software-driven business model. So there are very minimal risk of supply chain disruption. So that's why I feel Microsoft is a good choice. The second thing is the cloud computing dominance. Microsoft Azure is growing very fast and it's catching up with the market leader AWS, Amazon Web Service. So the cloud computing is booming. So if we invest under Microsoft, then it's very likely that we're going to get a very nice amount of return from Microsoft. The third thing is the AI leadership. Microsoft is investing crazy amount of money on R&D related to AI and machine learning. So now we know that things have changed quite a bit from the last year after the AI revolution. So the major key players who are playing the role model for the AI revolution, Microsoft is one of those companies. The second share that I feel it's okay to invest right now is this one, Palantir Technologies. The ticker symbol is PLTR. Currently, I do have 11 shares of PLTR, and it has generated 166% return for me so far. PLTR basically works with AI-driven data analytics, specifically for the U.S. Government contracts, specifically military contracts. The reason I chose this one, the first reason is it's no supply chain exposures. It's more of a software-driven business model, so that's why it's safe. The second thing is it works with the government contracts, so it works with the government contracts, the military, so the growth potential is quite high for this one. And the third thing is strong growth. See, when I purchased the share a few months ago, it was just only $31, and now it is 83. So the growth potentiality of PLTR is quite high. So that's why I feel like right now, if we invest under this PLTR, even in this situation, US tariffs situation, it could be a very good investment. All right, so the third company that I'm going to talk about that is okay to invest in this situation is CrowdStrike. The ticker symbol is CRWD. All right, so I don't have any shares right now, but I am seriously thinking to purchase few shares of CRWD, CrowdStrike. It's one of the biggest player of cybersecurity field, and we know that in this data-driven world, whenever we deploy anything, whenever we put anything on web, it needs the security. Either you work for any banking sector, you work for any military sector, or any sort of data, social platform, any sort of platform, we need to have security in place. If we don't have security in place, and if there is any data breach, then the company has to pay a lot of fines because of the different regulations, and also the reputation of the company gets a big hit. So that's the reason security is a major concern, and for this reason CrowdStrike could be a very good investment. In 5 years, you have seen like it has grown by 595, almost 600%. That's a crazy amount of return. So if you invested like $10,000 5 years ago under CrowdStrike, now you'd have like 60,000 US dollars. So I'm planning to purchase more because it's never too late. The growth potentiality is huge, so that's why I would definitely invest in here. The reason why it's better to invest under this CrowdStrike holdings in this US tariff situation, the first reason is that it is 100% US based operations. So there is no dependency, so that's why US tariffs won't be a problem for this particular company. And it has the recurring business model, so it's more of a subscription model. Every month the company will get the payment from the customers. So the growth potential will be huge, because when they acquire new customers, then their revenue will also increase with that. So that's the beauty of a subscription model business. The third thing is that it's a market leader. If we are talking about any sort of endpoint security, any sort of cybersecurity solution, then CrowdStrike has the leading product. So the key concept is like, if you invest under any key player for any particular industry, the probability to going high of the particular share is quite higher, because it's already proven the company is doing great. So that's why I would look closely this CrowdStrike share, and if I get a discounted price, I'll definitely purchase a few shares of CrowdStrike this year. Congratulations guys for reaching this far of today's video. Today I have showed you how the US tariff impacted my $160,000 of stock portfolio, what strategies I am planning to follow during this tough situation, what stocks I am avoiding, and what particular stocks I am planning to buy more, even if the whole stock market is struggling. So if you guys have any questions or any doubt related to the US tariff situation, let me know below in this comment section, and I'm gonna reply in a very short period of time. Thank you again, guys, for watching my videos. It means a lot to me. If you found this video helpful, please like and subscribe to my channel so that you can see my upcoming videos. Well, that's all for today. Have a great and wonderful day.